Hey everybody, this is Jim at sp500chart.com. It is Sunday early evening, about 6:30 p.m. We're going to take a look at what happened last week in the S&P 500. It's giving us a little bit of a mixed read on Friday, and you'll see why in just a second. But first, I got to remind you and warn you that the website and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out here on a 30-minute chart, just to remind you, we have a descending blue wedge that when we got above this line, we knew that the likely outcome would be we would return to where this wedge started to form. Now, technically, that was up around in the 3580s. This week we did not make it that high. We got up to right around 3550. So you might, if you're one who's playing things not too aggressively, you might want to consider that's good enough. I'm not saying that we're gonna fall significantly from that level, and I'll show you why in just a second. But we also need to remember that we have a rising wedge that wants to take us back down to around 3,000, which is where it started to form. So this wants to bring us here, this wants to bring us here, and the fact of the matter is both can be true. It's not true that we can be here and here at the same time, but since we broke down from this large rising wedge, this could be basically what we're seeing now could be a back test. Now, to add a little bit of intrigue to that, however, we discovered that we might be looking at an inverted head and shoulders pattern with a very small right shoulder. And this past week, on Thursday to be specific, we basically back tested that extended neckline. So to me, it looks like we still want to watch this neckline level carefully. It's at about 3430, and if that breaks down, then we could be setting up a move to test support elsewhere. And to be honest with you, there isn't a whole bunch of trend line support if we get underneath this neckline. We might find a little bit of support around 3305 from this gap, offering us some gap support, but really we don't find any trend lines on this chart really until we get down to the extended neckline from our really big inverted head and shoulders pattern back here, that line right there, that did not really pan out for us. That's that line right there. So just a couple things to be aware of. Now, if we are looking at an inverted head and shoulders pattern, then we would expect support here, and we would have a target of around 3660 roughly. And that is about 180 points higher than we are now, which eyeballing it, what is that about? What? 180? How much is that? Hold on a second. 180, but it's about a little bit more than 5% from where we are at the moment. So this pattern could also be true, and this 3660 becomes our back test of this broken down orange wedge. And remember, back tests don't have to be lower than the high that was in place in the pattern from the breakdown. As a matter of fact, a lot of times a rising wedge will have a back test that is higher than the highest point ever reached inside that wedge, or in this case, even potentially outside of the wedge. Same thing is true with the descending wedge. You break out, and we didn't do it in this particular case, but we broke out, but we could have called a breakout, and then a week and a half later, we find ourselves down 150 points from where it broke out. That can happen. And so what you're looking for is what happens in relation to your trend lines. Finally, just one more thing I will show you real quick. And I don't know how important this is. We talked about how this looked like a little funny pattern here that sort of didn't fit too many accepted definitions of what a bull flag would look like because it's broadening. But there it is, just the same. I did change this line from Thursday, and it looks like Friday, maybe. I wouldn't put much faith in this, but maybe what we saw on Friday was a breakout from this little 3.5 day descending pattern, and then late a back test on that same line. We'll know more tomorrow. If we get out of the gate and get some green on us, and we end up, with a 30 or 40 point gain, then we'll know that was the right call. But we are just a little bit underneath this rising support line. But I'll remind you, on Thursday, we also were under it, and we were able to regain a position above it. That line makes pretty much a parallel channel with this and this. And remember, we had been looking at this as a line of resistance that we blew out over early in the week. And if that's the case, then this would be the, I can shift that just a little bit now that we know more. This basically would be the partner. This would be resistance. This would be support. But these are very, very, I made these very dim for good reason. I don't know how much they can be trusted. So the chart has an overall ascending channel look to it, but things aren't lining up like you'd like. So that said, I'm looking at this week. I want to see if we end up setting a new high. If this is if Thursday's action was a back test on this neckline, then we could come back to it again. But if that was a solid back test, there's no particular need to do that. So there is your weekly review for the week ending October 16th. Thank you for taking time out of your weekend to watch this. And as always, thanks for your very kind support. Take care.